Hello traders, Corey Mitchell here with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of April 21st. Hopefully you're having a good long Easter weekend. Had some family over today for dinner. I'm sure lots of you might have dinner or something planned for tomorrow. And if not, hopefully you're having a good weekend. And thanks for tuning in, seeing what the markets are up to. Do have a sale going on. Any of the courses, you can go to TradeThatSwing.com, trading courses. Got the stocks, swing trading, day trading, Forex, swing trading, day trading, investing, and 20% off using Easter 2025. Let's get to the market indices. You can see I got a couple different ones up here, and the major indices still in downtrends. We have had this bounce, but nothing here that I would consider a technical turnaround just yet. Same with the Canadian index. Bitcoin had this range going. We've dropped. Now we're trading in a range just below it. I've discussed this for multiple weeks. Ideally, talked about this last week, near the bottom of this box, okay. But really, the better signals when we start building back to the upside and we start pushing above this current box and building back to the upside. So, same with this scenario. We have this low, then we start building up here, then we start building up here, and then we break above the whole thing. And that one, not much of a pullback. I can't remember if it pulled back on the daily chart. I believe it did. This is a weekly chart just to kind of capture a bit bigger perspective. Gold miners, very strong, along with gold. Had that little quick pullback here, but it has just been sprint to the races here. So these mostly have remained in play even while the market's been in its downtrend. This has kind of been the one spot that's been pretty good. And yeah, a lot of these stocks still acting very well. Let's look at the market health indicators. So we have the price action up here, but these kind of look at what's going on under the hood. No follow-through day yet. A follow-through day is higher volume than the prior day, and I like to see at least a 1.5% gain. We're getting quite far into this potential up move for a follow-through day, yet at the same time, I think if it occurred now, we peaked our head above here, especially if we saw a little bit of momentum the day or so after, things start to look a lot better. At the same time, if we start falling off, not as good. This is rate of change, simply the daily percentage movement of the S&P 500. I have a frowny face on it because anytime there's an over 2% move to the downside, that just shows strong selling coming in. And volatility is not correlated with uptrends. We tend to see high volatility, 2% down days, frequently occurring in downtrends and near turning points, but that's still kind of near in the downtrend. And yeah, we're not seeing volatility drop off much recently, so that one's still a frowny face, more indicative of a downtrend. Advanced decline line, I turned this to a frowny face. It had been holding up fairly well. Like if you go back to this point compared to this point, it only got back down to here, whereas the S&P 500 is way below that low. And we have, in the short term, just, a little bit of higher swing high, a little bit of higher swing low. We're just kind of creeping up, short-term uptrend. So that's kind of one of the things I look for is the higher swing lows. But I'd give this minor credit. It's kind of nice, but I wouldn't say this is super convincing to me. Up volume is how much upside volume versus total volume, and we did have the huge upside day, more than 90%. What that means is more than 90% of the volume that occurred that day occurred in stocks moving to the upside. That was this huge green bar. I think it was up around 98%. And so that's our last signal with this indicator. That is a bullish signal. Those generally occur near market bottoms. And so that could be indicative that possibly we have seen the bottom. Now that does not mean we will scream higher or anything like that. It just means maybe a bottom is in. Fairly reliable signal, but I don't give anything, nothing's 100%. Upside volume, percentage of stocks above their 50-day moving average. So the red is S&P 500 stocks, 24% of S&P 500 stocks above their 50-day moving average, 19% of all U.S. stocks above their 50-day moving average. Generally much easier to make money when most stocks are moving up. Right now you can see only about 20% of stocks are in an uptrend 50-day moving average. Nothing special. It's just a very crude measure of stocks moving up and above their 50-day average price. Most stocks below it. A little tougher environment to make money on the long side. Ultimate indicator always how many quality setups there are and how it's basically been working. If you've been killing it in this environment, hey, keep doing what you're doing. If you're struggling and you keep hammering into it, maybe you should be aware of that and note the performance and find a better way of doing things. Sectors on the move, nothing good overall across all these time frames. Consumer staples and utilities, could look at those. Utilities, usually a little bit quieter sector, same with the staples, but these are decent moves, so could look at those sectors potentially, although I don't usually, because they're not super explosive movers. But when we don't have a ton, might be an okay place to look. But they were not as strong this week, but not bad. Energy, healthcare, materials, the strongest overall. But yeah, these guys holding up the best over all the time frames. Just not a sector that I usually end up trading just because it's lower movement, not as volatile. I want those more explosive stocks. But that's totally up to you, which stocks you want to trade. So what I'm doing right now, I'm enjoying the volatility by day trading. Gold stocks remain an option for trading, and we'll consider some limited exposure outside that industry. Bitcoin's still dead to me. As we talked, we need to start building up. And always the option to day trade. Swing trading has these periods of action and inaction, whereas day trading, a little more action every day. It's just on a smaller time scale. Day trading, we have periods of inaction and action, but it's all condensed within the course of the day. Whereas with swing trading, it's expanded out over the year, and we have months where we're pretty active and maybe some months where we're not very active. So it just depends on what style of trading fits you. So that's the weekend update for the stock market. Hope you have a great rest of the weekend. Happy trading.